Yes, people, a very happy evening to all of you. So, guys, we are doing a brand new unit under the company accounts series, which talks about accounting for bonus issue and rights issue. So, as all of you know that this unit in particular is a new addition to the CA Foundation new scheme that we are pursuing now. Prior to the new scheme, this particular unit, guys, was a part of your CA intermediate accounting. So as all of you know that there's a transition that has happened and there are certain chapters from the CA intermediate accounts subject, they have brought it down to the CA foundation level. So in that, the very first topic that we're going to deal with is accounting for bonus issue and rights issue. So this is basically a continuation of company accounts. So company accounts, what is the very first unit that we saw? First units combining together. It's accounting for issue of share capital. How an equity share capital or a preference share capital, which is issued to public, is been accounted in the books of accounts. Then we saw third unit where we learned how do we do the accounting for issue of debentures. Correct? Now, the next topic that we're going to deal is accounting for bonus issue and rights issue. So in this particular chapter, the two concepts that we are going to discuss. If you look at the name, we're having two concepts hidden in it. One is how do we do the accounting for bonus issue of shares, and second is rights issue of shares. So in that, the very first topic that I'm going to discuss today in today's class is bonus issue. So all of you know that there are three types of companies. Can you please name or three kinds of companies? One person company, private limited company, public limited company. Excellent. So this concept of bonus issue and rights issue is pertaining to the private limited company and the public limited company. So both private company and the public company can issue bonus shares. People generally think that the bonus shares can be issued only by public company, which is not true. Company Act allows the bonus shares to be issued by both private company and public company. But if you see all the practical questions that they have taken, they have given all the examples only pertaining and relevant to the public limited company. And that too, which is listed one. So what is public company? What is listed and unlisted? We'll discuss in few moments. Public company, though we have discussed in detail when we did company accounts. So maybe here I'll give you a quick recap of what is listed company and unlisted company. So normally, what is a public company? A public company is a company which is not a private company. This is what you have studied, no? Yes. But in addition to that, there were more explanation that was given to you. So public company is basically when the company is intending to take the finances and funding from the general public, then in that case, you're supposed to form a public limited company. You cannot have an OPC or a private company. If you are an OPC or a private company, you cannot take funds in form of equity or preference share from the general public. Though in private company, you can issue equity shares and preference share. But in private company, you issue the equity shares and the preference share to the identified known investor, who could be an angel investor, venture capitalist. The person is known to you. Whereas in public company, when the shares are issued, the person to whom you're issuing the shares, you need not personally know him. He's a general common man. So Companies Act said that if you want to take money from the general public, whom the company does not even know, then you're supposed to form a public limited company where minimum there should be seven promoters, or the shareholders, you can say, who starts the company, and maximum can be unlimited. So what does the public company do? Public company takes money. This is public company takes money from the general public. In return, what does the company give to the general public? Sir, they give the share to the general public. What does share means? In simple word, sir, share is nothing but share in the profit of the company. In simple language, layman language. What does share mean? Share means you're getting a part, proportionate part in the capital of the company, and the same proportion is used at the time of distributing the share of profit in form of dividend. So shares is nothing but you are a part of company. You're sharing a particular part of the profit of the company. That is called as shares. So if the company is collecting the money from public, and in return, if the company is issuing shares, then it is called as issue of shares for consideration in cash. So if the public company collects the money and issues the share to the general public, we call it as issue of shares for consideration in cash. So when the company issued the shares, what did it get in return? Money, cash. So that is called as in return the consideration. If I give something and I get something back in return, that is called as consideration. So what is the company getting back in return for issuing the shares? So it is getting money back. So it is called as issue of shares for consideration in cash. So how do we do accounting of this? We already studied in the first 2 units. Can you quickly tell me? Let's suppose if the issue is lump sum, no installment. Please can you tell me what is the journal entry? Sir, bank account debit to equity share application. Bank account debit to equity share application. So number of shares applied into issue price. You get the amount. Am I right? What is my second entry? Equity share application account debit to equity share capital. So my question goes to all of you. Generally in 11th standard, we have studied, when we studied in the foundation, the concept of sole proprietorship concern. So when a sole owner or a partner gives the capital, the entry is what? Cash or bank account debit to partner's capital. Cash or bank account debit to owner's capital. Why alone in this particular topic, instead of debiting bank account debit to equity share capital, instead of doing this, why are we introducing a intermediary ledger? So this ledger is opened here. Credit means positive. And here they've debited means subtract. Why? It is a temporary liability. Why it is a temporary liability created? Why do you want to refund? No. We've discussed this already. Why do we create equity share application ledger? In 12th also we discussed this point. We have something called as minimum subscription. What is minimum subscription? 90% of the issue price at the application stage. At the application stage, whatever money you're collecting, 90% of the face value at the application stage. At the application stage, whatever is the face value, at the application stage, whatever is the face value, 90% of that is the minimum subscription. If you get it, you can continue with the allotment. If you do not meet the minimum subscription criteria, you have to refund the money back. All of you know that when the company opens the slot for application of shares, the slot is open for 3 days. So here, though you pass the entry on 1 day, but in the bank account, the money comes in 3 different dates. When the money comes in, that time itself, do you know that you will allot the shares to this particular person? No. So whenever the money comes in, you will debit it. But we are following double entry system of accounting. So what will be the corresponding entry you have to give us a credit? If you put capital, which means you are making him the owner of the company. When do you put capital? When you have allotted the shares to him. When you've decided, yes, he's the owner of the company. That time you credit capital. But when the 3 days application is open, when money is coming in, that day can you decide that he'll become the shareholder of the company? No, because we are yet to check the minimum subscription criteria. That is why account said that in that case, we'll open a temporary liability account. We'll open a temporary liability account, and this money, whichever is coming in the bank account, the corresponding impact, instead of giving in capital account, we'll keep in this temporary ledger. Once the minimum subscription criteria is satisfied, after that, then we will reverse the temporary liability. We'll reverse the temporary liability and give a credit to the permanent liability in form of capital. So what happens here? Account is opened here, credit, closed here, debit. Debit and credit is nothing but plus and minus. What is debit and credit? People say debit and credit means debit what comes in, credit what goes out. That is not meaning. That is rule. Debit what comes in, credit what goes out. Debit all expense losses, credit all incomes and gains is not meaning. It is a rule. And that rule is called as golden rule, traditional approach. So what is the meaning of debit and credit? In simple language, layman language, if I have to tell you, so debit and credit is nothing but plus and minus. So if it is plus and minus, then why are you complicating by giving a debit credit rule? Because debit will act as sometime plus, sometime minus. So when should we act plus, when should we act minus? If that rule is not defined, no, people will get more confused. So what happened? This plus and minus is there, no? They have wrapped with a new wrapper called as rules of debit and credit. So when you apply the rule and when you follow the rule as it is, the system will take care of what to be added, what to be subtracted. You don't have to apply your mind. Oh, should I add this or minus this? The rule itself will take care. That is the beauty of the accounting system and accounting process. Now, the reason is why, now you might ask a question, sir, why are you discussing here in bonus issue, rights issue? Because I wanted you to know and understand what is the significance of temporary accounts that we open. So here the temporary account is in liability nature. Sometimes it is asset nature. So you should understand when and under which all circumstances you open the temporary accounts. Because in bonus also, there's one particular place where you're opening the temporary account. So you should understand that in accounts, there are at times we open the temporary accounts for certain reasons. So till this we studied. Nothing you have discussed, guys. Whatever you have discussed in 12th standard and the CA foundation, that only have discussed so far. Now let's come back to our original PDF. So what is issue of shares for consideration in cash? So this is a concept where the public company issues the share to general public. In return, in consideration of that, they're receiving the money. Now, in accounting for bonus issue or during the bonus issue, what happens is that the public company or a private company is issuing the shares. But in return, the money aspect is not coming into picture at all. Correct? First concept is company is issuing the shares to whom? These are the general public. When the company is issuing the shares for the very first time, those people are general public. And in return, we're getting money. But now in the context of bonus issue, here what happens? The company issues the shares. But now these are not general public. These are now shareholders, which means, so these are existing shareholders. So which means bonus share cannot be given to general public. Bonus share can be only given to the existing shareholders, where we issue the shares to the existing shareholders. In return, we are not taking any money at all. And this process is called as issue of bonus shares. And there is no consideration flowing at all. Now you will have a lot of doubt in your minds. Sir, why is company doing all that? Company is giving extra shares to the existing shareholder. So shareholder, is he benefiting first of all? If yes, why is the company only thinking about the benefit of the shareholder? What does the company benefited here? Like that, you have a lot of questions. So all that we'll be discussing in today's session. So what is bonus shares? So I have made a summary. Now in your textbook, if you look at, they've given a lot of theory points. These theory points at times becomes very difficult to, do a quick revision. So what did I do? I took important points from this textbook and prepared a summary notebook. Now, this is what you're supposed to do with all the chapters. This I've sat literally for, let's say, 3 hours or 4 hours. I studied the entire topic. Today, when I'm taking class, please understand, I've done myself the revision 4 times. I sat and developed every single time. I used to sit and prepare the notes. The notes got better and better, better and better. So imagine you as a student who's going to write in the examination, whatever clarity of thought I have, the same clarity you should also have. So as a teacher, qualified CA, 4 times if I'm sitting and studying, imagine how much time you have to sit and study for you to pass the examination. Look at the efforts. For me, it was very easy and convenient to directly take the theory from the textbook. But what did I do? I sat literally and compiled the important points for all of you. Why? Tomorrow or one day before the exam, if I have to revise, I will not sit and turn and flip around so many n number of thousands of pages. What I will do, I'll have my summary notebook. Tuck, 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 all the point, I'll just go through. So it becomes easy for you. These are called as notes. So you need to develop the habit of having such notes for all the chapters. I'm not only telling for accountancy. Wherever you feel in whichever subject, have the habit of taking the notes. And this notes will become easy for your quick revision. These notes will become handy for you for the quick revision. Okay? Now, so there are certain rules that we have to follow, which is related to bonus share, which is given combiningly by SEBI and Companies Act. So that I have noted it down. So let's have a look at it. Sir, bonus issue means issue of additional shares. Additional shares free of cost to the existing shareholder. Did I tell anywhere that bonus is issued to the general public? I told very clearly, first time when you issue the shares, it is to general public. And that person upon allotment becomes my shareholder. And bonus is given to the existing shareholder. Second, did we collect any money on the bonus issue? Sir, no. We are giving it free of cost. And these are the extra shares that he is getting. So one thing is very clear. So bonus share is nothing but additional share, which I'm giving to my existing shareholder free of cost. Guys, each and every point that I'm saying, if you put very beautifully, if you start organizing the data right from now in your mind, I'm telling you, your revision that you're going to do later will become very easy and will be very crisp. People have difficulty when, they're physically present in class, but mentally absent. So nothing is going properly in your mind. You're not able to organize data in your mind. So when you go back and sit and study, that time you'll have difficulty in recollecting the points and remembering the points. So please pay full attention in class so that whatever you're studying, effective study happens now itself. I'm going very slowly, doing multiple time revision so that your job has become comparatively easy. Now, bonus issue is called as, we have given three names to it. The primary name, which you have to remember, it is called as capitalization of profit. The purpose of giving the bonus is capitalization of the profit. Now, what is the meaning of capitalization of profit? You'll understand when I tell the journal entries, how the journal entry is happening, what and all is coming into picture. So that time when I tell you, you'll understand what is the meaning of capitalization of profit. So this is pending to be explained. Second, bonus issue is also called as scrip issue. You have to remember all these alternative names. They might ask you as a true and false. Bonus issue is also known as scrip issue. True or false? True. Bonus issue is also called as capitalization issue. So these are the three alternative names. For a second, forget your dinner tonight, but not these three names. So bonus issue is also called as scrip issue or capitalization issue, or is called as capitalization of profit. Third point. Sir, issue of bonus shares results into increase in the total number of share and capital issued of the company. Sir, we didn't understand this point. Can you please explain? Yes, of course. Now, let's say there is XYZ Limited Company. XYZ Limited Company. This company is currently having, this company is issued at the moment 10,000 equity shares of rupees 10 each. So can you tell me what is the issued capital, subscribed capital? All the money is come. So what is the capital of the company? So 1 lakh rupees. Wonderful. Now, the company has decided that the company wants to give a bonus issue of 1:1. 1:1. How do you read this? This 1 stands for the number of shares that you're extra going to issue. So 1, the first one, 1:1. The first numerator means what? I'm going to give 1 share for every 1 share you are already holding. If I say 2:1 means what? I'm going to give you 2 bonus share for every 1 share you're holding. If I say 1:2 means what? I'm going to give you 1 bonus share for 2 shares holding. So what is the first point? First point, or first item means how many bonus shares to be issued. So one bonus share to be issued. This means what? How many shares we already hold. So first one means that I'm going to give one bonus share for every two held. So when I say 1:1 means what? So I'll give you one share for every one share held. So what is the bonus share that I'm going to give? How many bonus shares? Sir, the company is issued 10,000 shares. So how many shares the shareholders are holding? 10,000 shares the shareholders are holding. Now how many bonus they're getting? Same one means 10,000 shares. So additional shares is 10,000 shares. So bonus shares 10,000 or add 10,000 bonus shares of rupees 10 each. So what is my bonus capital? 1 lakh rupees. So now please add and tell me what is the total number of shares of the company now? It becomes 20,000 shares. And this will become how much capital? 2 lakh as capital. So when I issue the bonus share, what is the impact on the number of shares? So number of shares increases. What is the impact on the capital? So capital of the company also increases. Now how the accounting is done, how this entry is coming, all that we have to discuss in this topic. I'm just trying to give you an outline idea. Once you understand the entry part, no, then you'll understand what does this means. So issue of bonus shares increases the total number of share and its capital, but it does not increase the net worth of the company. Net worth of the company, when you go to CA intermediate, there'll be different way to calculate net worth. Now, in the foundation level, if I have to relate this net worth, I'll relate this net worth towards net asset. You know what is net asset? We studied in the partnership topic. In 12th standard, had you studied ratios? There also we used to calculate the net asset, which is also called as capital employed. So two formulas for that. Asset side approach, liability side approach. Remember? Asset side approach, what is the formula? Total asset minus, I'm talking from the partnership point of view, just to relate it. Three monkeys here to minus. What are the three monkeys? Old goodwill, fictitious asset, non-trade investments. From total asset, if I minus 3, I'll get the balance asset. From that, if I minus external liability, I get my capital employed. In 11th standard, we studied something called as accounting equation. Accounting equation, what is the equation? Asset is equal to liability plus capital. If you take this liability with this side, it becomes asset minus liability is equal to capital. Same formula. This is asset. This is minus liability is equal to capital. Now, few adjustment we have done for obvious reasons. So, this is asset side approach. What is liability side approach? If you remember, we took the capital of the business, partner's capital account, then partner's current account, plus reserves and surplus. So what is capital employed? The net worth of the business. So from my total asset, if I pay all the liabilities, balance money is left as owner's money. My net worth. So what is my net worth? The money which is lying in my capital account, the money which is lying in my current account, and the reserves and surplus also my savings only. All this money belongs to me. So this is my net worth formula. Now, in the bonus process, what happens is that when you issue the bonus share, are you getting any money? If you are getting money, then your net asset, net worth will increase. Correct? No? For example, let's suppose my cash balance is 1 lakh. Capital is 10,000. Reserves and surplus is 20,000. External liabilities 70,000. Correct? So what is my net worth? My net worth is equal to total asset minus external liability. What is my total asset? 1 lakh. What is my external liability? 70,000. So my worth is 30,000. 30,000 is worth of my business. Online people, are you all able to follow?
Yes, sir.
Yes, sir.
Yes, sir.
Now, if I do issue of shares for consideration in cash, I'm getting cash, 50,000 rupees. Then what will happen? The net entry is what? Cash account debit to capital. So 50,000 increase in cash, 50,000 in capital. Plus 50,000. And here in capital plus 50,000. Correct? So now what is my net worth? 1,50,000 minus 70,000. So what is my net worth? 80,000 is my net worth. From 30,000, my net worth is increased by 50,000. It becomes 80,000. So when you issue the shares for consideration in cash, when cash is coming, the worth of the company is increasing. But in bonus issue, are you getting any money? No. Your capital is no doubt increasing. Your capital is increasing. So what is the another impact? From where the another impact is coming? It's coming from your reserves and surplus. Now, why it is coming from reserves and surplus, we'll understand in today's session. So what happens is, from reserve, you'll minus 50,000 rupees. Here, I took a wrong example. Maybe instead of 50,000, I can put, let's say 10,000. It'll be more easy. Let me put here 10,000. If I add 10,000, so it becomes 1,10,000. So 1,10,000 minus 70 is how much? Sorry? 40,000. Okay. Now, 10,000 is added here. 10,000 is added here. This is issue of shares for consideration in cash. Now here what happens is, in bonus issue, you don't get any cash, but your capital increases. That we saw. Bonus issue will increase the number of share and capital. That is clear. So one impact is if it is given here, where is the other impact coming from? It is coming from reserves and surplus. Now, why it is coming from reserves and surplus is what we are going to discuss today. So if plus 10,000 is happening to capital, then minus 10,000 is happening from reserves. So these both put together is my net worth, correct? No? If I use my liability side approach, what is the formula of net worth? Sir, my capital plus reserves and surplus is my net worth. So 10,000 rupees was my original capital. What is my original reserves and surplus? 20,000. So what is my net worth? 30,000, which is this. Now after bonus issue, what happens? Sir, capital is increased by 10,000, but reserves is decreased by 10,000. So my net worth is still the same. So therefore, when the bonus issue of share happens, the total number of shares, the total capital increases, but the net worth of the company does not change, does not increase or decreases, does not change. Now, what you will have a doubt as of now is that, sir, why did you minus this 10,000 from here? That is what we're going to discuss in today's session. So are you clear with the first 3 points, people? Please tell me, are you clear with the first 3 points? All in people, please respond, all of you.
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Fantastic. Let's suppose I'm running a public limited company. Night, I had a dream. God coming in my dream telling, tomorrow onwards, give bonus issue to your shareholders. Like that, next day morning, I get up and I call all the shareholders. Hey, shareholders, I'll give you bonus. Come. What, am I running a Vada Pav company? Come and take Vada Pav and go? No. If a company wants to issue a bonus share, there are certain formalities it has to follow. First of all, for you to think about giving the bonus shares, in your articles of association, you should be authorized. You should be means who? Company. The company should be authorized by its articles of association to issue bonus shares. What is AOA? What is AOA? It is an internal governing rule book of the company. If any company wants to do anything, it has to follow a rule, no? For example, you are now in this building. So you are governed by the rules and regulation of the academy. The moment you step out of the academy, you are governed by the rules and regulations of the building. The moment you are going out on the road, you are governed by the rules and regulations of that particular state's RTO. The moment you step into your apartment, you're governed by the apartment's rules and regulations. Correct, no? Like that, a company also has to be run according to the rules and regulations which is established by its promoter at the time of incorporation. So while incorporating the company, its promoter would have said that this is allowed, this is not allowed. If this is allowed, it should be done in this way. Like that, a process and a procedure is set up. So in that process, they should have said that, okay, the company, you have the right to issue bonus share. In articles, if the authorization is not there, but still if you want to give the bonus share, then what are you supposed to do? You have to go and amend, change the AOA. You have to reauthorize it and then submit the revised AOA to the register of companies, get its approval. Then you have to commence with the issue of bonus shares. Clear this process, online people? So first of all, if you are wanting or thinking about issuing bonus share, please check whether your articles of association is allowing you to issue. If it is allowing, no problem. If it is not allowing, change AOA, submit the changed AOA to the registrar of company ROC, get its approval, then you can think about issue of bonus. So let's suppose AOA is authorizing it. Can we give bonus? No. The second procedure is you have to call for a general meeting of the shareholder. All of you know we conduct AGM once in a year. AGM is conducted once in every year so that the company can disclose whatever happened throughout the year to the shareholders and take certain approvals in the AGM. So AGM, all of you are aware. Now, are you aware there's something called as EGM? In company law, did you study by any chance? There's something called as EGM, Extraordinary General Meeting. So Extraordinary General Meeting is also a meeting of shareholder. AGM is also a meeting of shareholder. AGM is held once in a year after the accounts is finalized. For example, we are currently in March, which financial year? 23-24. So next 21, 22, 23 days, what happens? Year end will happen. Then the company will sit and finalize the account. Auditing, CA will come and do the statutory audit. And once the CA is signing the balance sheet, the company will prepare the annual report and send it to the shareholder. And they will invite the shareholder to please join and participate in the AGM. So that happens once in a year. This is defined process. Now, what is EGM? EGM is basically whenever you want to make some important decision. And in that, shareholders' approval is compulsory. Then you cannot wait till AGM. No? When will AGM happen? August, July, September. Now, today I want to issue bonus share. So can I wait till August and September? No. So today I will discuss with my team and call for EGM in next 1 month to discuss some extraordinary matters. That is called as EGM. So both are GM, general meeting, general meeting. General meeting means what? Meeting with shareholders to discuss some important point is called general meeting. If the discussion is happening in the AGM, then it's called as annual general meeting. If the discussion is happening other than AGM, then it's called as EGM, extraordinary general meeting, where the shareholders should give green signal. Okay, let's do it. Like that, you have to seek approval from the shareholders also. Am I clear with this process? Online people. Hello?
Yes, sir.
No
Yes,
energy,
sir.
online people. No energy. Loudly, loudly.
Yes, sir.
Very good. The more you participate, the more you give the energy or talk with energy, I'll also feel energetic to take the class. If you are dull, I'll also be dull. Is it okay if I be dull with all of you? You want to see how Pratik sir takes classes when he's dull? Or anybody will take class? You want to see a trailer? Eva, today we're discussing bonus shares. So bonus means what? Additional shares issued by the company to the existing shareholder. It is called a scrip issue, capitalization of profit. Where the number of shares increases, the capital increases, but net worth does not increases. Why? You must be intelligent. You are CA, so you should be knowing everything by now. So I'm expecting that all of you are aware of all that. Therefore, I'm going to next point that company shall authorize by its AOA to issue bonus share. All of you must be knowing what is AOA. We have studied in the Companies Act, so I'm not explaining. Issue of bonus shares should be authorized by shareholders. This is when people take when they have no energy, no intention, no heart to teach the students. Can I teach that way? Online people?
No, sir.
No, sir.
If I take that way, what will happen? Your accounts class is not screwed. Royally, it will be screwed. You want to screw your accounts class?
No, sir.
Then what are you supposed to do? Transform the energy. How does the transformation happen? First, like how I am carrying a beautiful smile on my face, all of you should carry that smile throughout the session. Second, the moment I ask question, tuck, 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 answer should come. I should be shocked by, seeing your answers. Online people, can I expect that from all of you? Hello?
Yes, sir.
Yes, sir.
Okay. Next point. 6th point. Now AO has said that you can issue bonus share. Shareholders also said, go ahead. Let's do it. You cannot go ahead. You have to check for two important points. First point, if a company is wanting to issue the bonus share, it should ensure that it has not defaulted in payment. If somebody's payment you're supposed to give, if you have not given, give that payment fully. Then come and do the issue of bonus shares. So you should not have defaulted in payment. Sir, which payment? In company, there are hundreds of payment, different types of payment. Which payment you're talking about? We're talking about interest and the principal. Interest on loan, principal. So interest and principal on public deposit. If you have taken any deposit from public, you said that I'll repay the money back. Principal is not repaid. You said I'll give the interest. You did not give the interest. You cannot issue the bonus shares. So if you want to comfortably issue the bonus shares, if there is any outstanding interest, if there is any outstanding principal, you understand what is the meaning of outstanding? Outstanding means what? Yet to pay. Yet to pay interest, yet to pay principal. If there is anything like that, please repay it. Please repay it. Only after repaying, you can think about issuing of the bonus shares. So on the public deposit or any debt security example, debenture. Security means debenture. Debenture is a security. It's a debt, borrowing. So if there is any borrowing you have taken from bank to debenture, public deposit, whatever name, on that, if there is any interest or principal outstanding, you have not made the payment, you have defaulted in that, you cannot issue the bonus shares. Is this point clear, online people? Is this point clear, online people?
Yes, sir.
Sir.
Next point that you have to be careful is that you should not have defaulted the statutory dues of employees. Now, what does it mean? Have you come across this term called as provident fund? PF. What is PF? Though I discussed with all of you in the foundation class, but still I want to one more time discuss. What is provident fund? This is Mr. X. His salary per month is, let's suppose, 50,000 rupees. Do you think that at the end of the month, he'll get his full 50,000 rupees back? For a moment, I'm ignoring, leaving the tax component. Forget tax. Can he take back 50,000 fully at home? Can the company pay full 50,000? The answer is no. Government of India compels certain types of organization that you don't make the full payment to the employee. You keep some amount with you. So what does the company do is basically, on this 50,000, I'm taking a rough percentage. 10% of the money, which is 5,000 rupees, you please keep it with you and give it to the government. So from this 50,000 rupees, if I minus 5,000 as PF, what is the money that I'll give to the employee at the end of the month? 45,000 rupees. Now the question that arises is that, why did the company deduct 5,000 rupees? And why is government interfering all this matter? What has government got to do here? This is not even tax. This is provident fund. I am doing job for a company, service to the company. Company is paying me the money. Why is government poking the nose in between? Now this is because in olden days, what happened is that they were all this labor class people or little bit above labor class people. What they used to do is, whatever salary they got, no, everything they kept on spending the money. Month end, if the salary comes in next 4 days, zero, full money spent. They did not even understand how to do the savings. And if you don't do savings, how will you buy a home? How will you buy a car? How can parents do the wedding of their son and daughters? If today people are spending lakhs and crores of rupees, it's a result of the accumulation of the savings. So in those olden days, people did not even know the concept of savings. Yeah, of course, there were one segment of organized people. They knew it. But in India, how many unorganized people are there? So whatever money they came, they spent. In movie we see, no, there's one old lady working day and night in a factory. She gets the wages at home. What does husband do? Take entire money, drinks off and goes. That type of people also were existing. So people said that, or government thought that if we give them the entire salary, they will not have any savings. So we have to enforce a compulsory saving. The government said that company, you don't give him full amount. A percentage of that you hold it and deposit in the PF account. This account will be with government. I will have the money and I'll keep it accumulated continuously so that after 10 years and 15 years, if I accumulate, how much will become? It will become several lakhs of rupees. And after that, I'll allow them to withdraw the money. So that in future, 5 years, 10 years, 15 years down the line, when there's a lump sum amount, they can use for a specific purpose, such as wedding, house, car, whatever purpose they want. So this 5,000 rupees is held by whom? Company. So company is having this money. If the company does not deposit this in PF account, it is a default, no? Did the government say you deduct the money and you enjoy the money? Government said that no, you deduct the money and deposit the money in the PF account, which is a government account. So if that the company is not doing, then it is called as defaulting of the employees' dues. So statutory mean what? Compulsory by government and law. It's called as statutory. So PF is a statutory due and this is related to employee. So if any statutory dues pertaining to employee is not been handed over to government, you cannot go ahead with the issue of bonus shares. Any difficulty? Now here there's one more catch. So this 5,000 is there, no? Is a employee contribution. Now what is the journal entry here? So salary account debit 50,000 to PF payable 5,000 to cash or bank 45,000. Sir, for company, full 50,000 is expense, Whether I give that 45,000 to employee hand or whether I give this 5,000 to government, at the end of the day, I paid 50,000. So for me, full 50,000 expense. Any problem? So in that 45,000 rupees I gave to the employee. So to cash and bank. And this 5,000 I'm yet to give to government. So you create a payable entry, PF payable. The day when you give the money to government, the entry will be what? PF payable will be reversed to cash or bank 5,000, 5,000. Now the problem comes when you pass this entry, you showed a liability, but you did not pay the money to the government, which means you never paid the money to government, you never passed this entry. This is called as defaulting of statutory dues, where you deducted the money from employee's pocket, but you kept the money, you did not give to the government. You did not hand over to the government, which is wrong. This is first point. Now, apart from PF, this is employee's contribution. Sometimes employer also has to contribute from his side. Government will say, you also contribute one small amount for his savings. That also you're supposed to pay. If you don't pay, that is also default. So this is for PF. Gratuity. Gratuity will come, we study in the C entry, you'll understand. If a company is working for, let's say, more than X number of years, example, let's say more than 5 years. So if somebody is working you for 5 years, look at his loyalty. In today's world, people don't stay with any company for more than 6 months, 1 year, 2 year, 3 year maximum. If somebody is staying with you for 5 years, 10 years, look at the loyalty. So for a person who is so loyal to you, as a token of love and respect, you should pay him some lump sum amount when he leaves and goes. There's so many people who are there in the company for 20, 25 years. So when 25 years ke baad he leaves the companies and go, no? If he takes his normal salary and go, not a big deal. But as extra love and care and affection for that particular employee, the law will force you to pay a gratuity amount. So gratuity amount is basically a reward that you give to the employee for showing his loyalty to the company for a longer period of time. So that is also called as gratuity. And this amount is also related to employee. Next is bonus. So any statutory dues means what? Any dues which is to be paid on compulsion of government. So if that dues pertain to employee, if you have defaulted, then without clearing that, you cannot issue the bonus shares. So first 7 points, clear or not clear? Online people, hello.
Yes, sir.
Only 3 people responded. Fast.
Yes, sir.
Okay. Now, next point. bonus share shall not be issued in lieu of dividend. Please mark this point. Very, 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 very important. Section 63, subsection 3. It is there in your textbook also. Section 63. This subsection 2. All of you understand, no? 63 bar 2. How do you read? Section 63, subsection 2. Subsection 3 provides that bonus share shall not be issued in lieu of dividend. Now, what does this mean? Now, this company, public company, wants to give dividend. But instead of giving dividend, it says that no, I have to give you dividend. I've declared the dividend, but I don't want to pay you the money. Instead, please take bonus shares. Like that, if the company says that it is violated and prohibited under section 63, subsection 3, you can never give bonus as a substitution of dividend. It is not allowed. In India, Companies Act says that no. You cannot give bonus share in lieu of. What is the meaning of in lieu of? Instead of dividend, you cannot give. If you have declared dividend, means you have to give dividend. You have to pay dividend. You cannot say that instead of this, take that. No, you cannot do that. Why does company thinks like that? Why? Because if this rule was not there, now what people did is they declare dividend. If they declare dividend, they have to pay money. There's an outflow of money. Correct? Now, if you declare dividend and don't pay dividend, instead give bonus. So they don't have to pay any money to shareholder, because instead of money coming to you, it comes in form of number of shares only. So your number of shares will keep on increasing. But ultimate benefit will come when the share price of the company increases. If it doesn't increase, then what will I do with the number of shares? Let's suppose market price of face value of shares, let's suppose 10 rupees. All of you know what is face value? The nominal value of the shares. If share basic price of the share is 10 rupees. Today the worth of the company is, let's say, 25 rupees. It's been 10 years, still 25 rupees only. In future also, for next 5 years, it is likely to be only around 25 rupees. In that case, if you give me bonus share, if my number of shares keep on increasing, does it have any impact on me? Impact will happen. I'll be happy when this 25 rupees share becomes 150, 300, 400 rupees, means the bonus share I'm getting free of cost. So 0 rupees I'm getting bonus share, but I'm selling for 300 rupees. Then it is beneficial for me. But the share price is not even moving. Same price. What will I do with the bonus share? That is a cheating with me, no? Now, instead of giving me bonus share, had you given dividend, I'd have got in my hand. I'd have gone and had one vada pav income with that money. With bonus share, can I have vada pav? You go to vada pav guy and say, I have my bonus share created in my account. Take one bonus share, give me one vada pav. He'll say, get lost, donkey fellow. But money means you can buy anything. So dividend is money. Bonus is not immediate money. It's a money that you can encash it at the later stage. And later stage, who knows what will happen. So to protect the interest of the shareholders, SEBI said that, Companies Act said that, no. If you have declared the dividend, you have to pay them in cash. You cannot do a gimmick and tell, no, I'll give you bonus instead of that. You cannot play. In foreign countries, it is still happening. They are allowing in certain countries. But in India, they have restricted this very, very clearly. This is only to protect the interest of the shareholders. Very, very important point from the true and false perspective. Online people, okay or not okay?
Okay, sir.
Okay, sir.
Yes, sir.
Next
Okay,
point,
sir.
very, very important point. Bonus shares can be issued to fully paid equity shareholders only. This point means what? Is this question familiar? XYZ Limited issued 1000 shares, and these are collected in so many installments. So can I say this is not lump sum, this is installment? So application stage 3 rupees, allotment stage 2 rupees, first call 2 rupees. So how much rupees sorry, how much rupees is collected so far? So 7 rupees is collected so far. Balance when required. So balance is how much? 3 rupees. So can I say this 7 rupees is called up capital and paid up capital, and this 3 rupees is uncalled capital. The company is not even called so far. So in this scenario, can the company issue bonus shares? Tell me. I'm giving the scenario. Can the company issue bonus shares? Tell me, people. Online people. Offline gave me the answers. Few people, others yet to give me the answer. Can the company go ahead and issue bonus share? Online people. Agarjuna, Alvin, Dhanusha, Gokul, Gurleen, Jivika, Madhu, Isha, Selina, Trisha, Yogi. Please tell me. 7 rupee is the called up capital plus paid up capital. And this is uncalled capital. Call up unless, we've not called only. So can the company issue bonus shares? The answer is no. I would say partially yes, partially no. Why I said partially yes, I'll explain you in the upcoming session. First preference is it is no. Bonus shares can be issued only to fully paid equity shareholders only. This is a condition that is laid down in your section 63, subsection 2, where they are very clearly told that the partly paid shares, if any outstanding on the date of allotment, are made fully paid up. So, bonus shares can be issued only to fully paid equity shares. In this case, sir, what are we supposed to do? Now the company wants to do what? Give the bonus share. So what are they supposed to do? First, they are supposed to call up this 3 rupees. So if this 3 rupees is supposed to be called, what would be the journal entry? Sir, equity share, final call account debit to equity share capital. 1000 is number of shares allotted into 3 rupees. So 3000 rupees. You have to pass this entry. Sir, is this entry relevant for my current chapter? 100% yes. We have certain questions where they give this question and they'll tell you 3 rupees is called up and also paid up. So you're supposed to pass this entry first. And what is my second entry? Sir, when the money is received, what is my next entry? Bank account debit. Sir, money is coming to equity share, final call, 3000, 3000. Sir, what is the nature of equity share final call? What is the nature of the ledger equity share final call? It's a forgot temporary liability will come and debit. No, it's a temporary asset. It's a temporary asset like debtor. So we debited. And once the money is come, how do we close the debit balance item? By giving a credit. So asset is a debit balance. To create asset, debit. To close asset, credit. So this entry you have to pass. Now, after passing these two entries, can I say for this particular company's share is fully called up and fully paid up? Yes. Now can they issue bonus? The answer is yes. So what is the prima facie condition here? For you to issue bonus share, please check if that particular equity shareholders category is having fully paid up value. If yes, then go ahead with the issue. Now there is one exception to this, which I'll be discussing in some time. When I start doing the practical question, that time I'll discuss. So one exception is pending. Now, let's say there is a company XYZ Limited. Issued 1000 shares for 10 rupees. So what is the total amount? 10,000. What is my first journal entry? Let's say this is lump sum. First entry. Sir, bank account debit to equity share application 10,000, 10,000. Second is equity share application account debit to equity share capital 10,000. Correct? Now, what is the position of the balance sheet? Can I say equity share capital will be on the liability side 10,000 and bank balance it will be 10,000. Do you all agree? Guys, equity share application is a temporary liability. Opened here, closed here. So what am I left with? Bank in the debit. So if any ledger has got debit balance, it is asset. If any particular ledger has got credit balance finally, it is liability. So equity shareholder is going on the equity share capital is going on the liability side. On asset side, bank. Do you have any problem here? Online people, do you have any problem here?
No, sir.
Now, what did the company do? This company, they further invested in stock. They sold the stocks and all. They got the money and they made a profit. And profit is finally added either to capital or if it is undistributed, it will be there in the reserves and surplus itself. Correct? No? What is reserves and surplus? Undistributed profit. Savings is reserves and surplus. So let's imagine the reserves and surplus is 15,000 rupees a year. 15,000 rupees a year. And corresponding other assets is 15,000. So total balance sheet is tallying. Correct. If I do further issue of shares for cash, let's say another 5,000 rupees. So what will happen? 5,000 cash will increase bank and 5,000 capital will increase. If I do further issue of shares in consideration again for cash. So again same entry. Bank to equity share application. Now how much? 5,000, 5,000 and 5,000 application to capital 5,000. Correct, no? So every time I keep on passing the entry, my bank and capital will increase by same amount. Now imagine this issue what you're doing for 5,000. Here you are not issuing for consideration in cash. Let's suppose there is no consideration at all, which means it is a bonus issue. Then what will be the entry? Normally it is supposed to be bank account debit to equity share capital. Bank I cannot put in debit because I'm not receiving the money. So first two entries if I combine, what does it normally becomes? Bank account debit to equity share capital it becomes. But here, am I collecting the money in bank? So bank will not be in debit. And capital will be how much? 5,000 in credit. So the moment you put to equity share capital 5,000 in credit, can I say 5,000 will get added to my existing capital? Since you are not debiting the bank account, can I say there is no addition here? Now, we are following double entry system of accounting, where every transaction has got twofold impact. In that one should be debit, another should be credit. So credit aspect, my dear friends, you have given. Now, what would be the debit impact? Something I should write in debit, no? Yes. So online people, what do you think could be the debit impact? Because if you do not give debit impact and leave the credit impact only, your total of the balance sheet will not tally. So what is the debit impact? So here, instead of debiting, the bank will debit the reserves and surplus. Reserves and surplus account is debited by 5,000. So liabilities are credit balance item. Means if I want to increase my credit balance item, I have to give a credit. To decrease, debit. Equity share capital, I gave a credit. So it increased the capital. To increase the capital, what did I reduce now? Reserves and surplus debit. So credit is plus here means debit is minus. So this is minus and this is plus. So which means, sir, if this 5,000 is getting added, if this 5,000 is getting added in the capital, there's one more 5,000 which is getting subtracted in the reserves and surplus. So what does this mean, sir? This means that we're transferring this 5,000 rupees from the reserves and surplus ledger to the capital ledger. So the process of transferring your reserves and surplus to the capital is called as capitalization of profit. Where did we learn this term capitalization of profit? So in the second point, bonus issue is also known as scrip issue. Capitalization issue is also called as capitalization of profit. So what does capitalization of profit means? The process of converting or transferring the amount from reserves and surplus account to the capital account is called as capitalization of profit. Reserves and surplus is nothing but your accumulated profit, your savings, and that savings you're transferring to capital account. So that is called as capitalization. So profit is getting capitalized. Any difficulty in understanding this point? Online people, any difficulty in this point? Now, does reserve and surplus imply only one ledger, or under reserves and surplus there are multiple ledgers? Reserves and surplus is one ledger, or reserves and surplus is a category? Had you studied in 12th standard, the financial statement topic, where the new balance sheet format was explained, also in foundation we discussed, please tell me, reserves and surplus is a ledger name or is it a category name? It's a category name. Equity share capital is a ledger name. But equity share capital is coming under which category? Shareholders funds. So shareholders funds is one category. Like that, reserves and surplus is another category. Under reserves and surplus, there are multiple types of reserves. Capital redemption reserve, capital reserve, debenture redemption reserve, security premium reserve, general reserve, revaluation reserve. So many types of reserve we have studied. Yes or no? All in people, tell me.
Yes, sir.
Tell me. Everybody.
Yes, sir.
Now, when you have so much reserve in hand, now the question arises that this 5,000 rupees I should deduct from which reserve? Correct? No? We have to understand that also. No? Can I deduct from whatever reserve I want to do? Not possible. So now the Companies Act has given you the order. Which reserve you should first attack? Which reserve you should attack second, third, and fourth? They've given an order and we have to go by that order. And that order is very much logical also. So now, bonus share shall be issued from reserves. Correct? No? What did I do? From reserve, I'm giving the shares. I'm giving the shares to the shareholder. In return, did the shareholder pay any money? No. So where did the money come from? It's coming from the reserves. Guys, you gave shares to the existing shareholder. Existing shareholder did not give you the money. So in return, from where did the company get the money from? A transaction has got two impact. One is going out impact, one is coming in impact. Share is going out, but what is coming in? Money has to come in, no? But the shareholder is not paying the money because it's bonus share, free of cost. But the company needs money. So from where will it take? It will take from its own reserves and surplus. So now, bonus shares are issued from reserves, and you should follow the below rank and order for emptying that reserve first. The first reserve that you'll attack is capital redemption reserve. What is the meaning of capital redemption reserve? I'll just give an outline explanation. Maybe in the upcoming topics or in intermediate, you'll learn about this in depth. Simple name, capital redemption reserve. What is reserve? It is a saving. Online people, do you agree? It is a saving. Yes or no?
Yes, sir.
In normal language, in our day-to-day language, we call it as savings. Now, whatever your parents are earning through business and job, do they spend all the money at the end of the month or the year? No, they keep a savings. Some money, they keep it savings for your education. A part of the money, they keep it for your wedding. A part of the money is kept for constructing house. A part of the savings is done for your buying of a car. Part of the expenses for the routine monthly expenditures. So like that, they are categorizing the savings. So likewise, a business also does the multiple category of saving. In that, one type of a saving is for capital redemption. What is the meaning of redemption? Redemption meaning what? Redemption means repayment. What is the meaning of redemption? Repayment. So which shares are normally repaid? Generally, equity shares are not compulsory to repay, but preference shares are compulsory to be repaid. Tell me yes or no. Preference shares, what is the maximum redemption period? If it is redeemable preference share, what is the maximum period for redemption? This is also we studied. It is there in every book. Wherever you studied, this was topic discussed. For a redeemable preference share, what is the maximum redemption period? Beyond which you cannot keep that money of the preference shareholders. You have to repay money back. So what is the maximum year? 20 years. This is very well there on the 12th state board book also, 12th CBSE book also, foundation book also. It is called as redeemable preference share. A redeemable preference share is a preference share where the share is redeemed And the maximum time period is 20 years. If you want to redeem earlier, you can redeem, but you cannot keep the money beyond 20 years. My question goes to all of you. Let's say you are issuing a redeemable preference share, and the preference share is said to be redeemed after 5 years. That is, at the end of 5th year, the company wants to repay the money back. Imagine a scenario where your parent had the intention to buy a car 5 years from now, but they did not do any savings. So whatever money they earned every year, the money they kept on spending. And suddenly, if there is a huge expenditure, and if they want to buy a car, is it possible? Possible. They can take a loan. But taking a loan, is it not burden on parents' head? One parent is like, they want to buy a car, but they did not create any saving. Now, they had a vision 5 years before that, I want to buy a car. So today they are under that pressure, they want to buy a car because social status. But they don't have savings. But in order to satisfy that social status, what they did, they went for a loan, burden on the head. On the other hand, we had a smart parent who took classes from Pratik sir. So planning was properly done. Every year, let's say the worth of the car is 10 lakh rupees. Every year, what did that parent do? 2 lakh, 2 lakh, 2 lakh, 2 lakh. At the end of the 5th year, what is my savings? 10 lakh. Can I happily buy the car? How will be my attitude? How will be my body language? What will be my face reaction? Very happy. Why? Because one, I'm getting car, and second, there's no loan head on my head. This fellow will be partially happy. Confused reaction. He doesn't know. Sorry about the drawing. I'm not an artist, no. That's why I'm an accounts teacher. I can only express my emotions. So this person is partly happy, partly sad. Happy because he's getting a car. Sad because next month he has to pay EMI. This person, very happy because he's getting the car, no need to pay EMI. Same way, the company has taken the preference share money from the preference shareholder here with the condition that at the end of 5th year, I'll pay the money. Imagine this company is like that first parent, did not do any accumulation. At the end of the 5th year, he has to run every nook and corner for arranging the money. He will put pressure on the bank. See, 5th year came, I have to pay the preference shareholder, give me loan. He'll go to creditor. Hey, creditor, 30 days credit period. No, give me 60 days credit period, 90 days credit period. He'll go and torture each and every liability holders. Now, what will bank have the look on us? Bank will say, what donkey fellow you are? You're running such a big company. You didn't even plan for the repayment of the capital. How is it possible? Correct, no? People will start looking the company in a very bad manner. Correct? On the other hand, now this is a second company, like the second parent. What they did? Every year, whatever the profit they earn, no, from that 2 lakh rupees they transfer to capital redemption reserve, which is a separate box. I told you, no, parents they have separate savings for car, house, marriage, like that. This 2 lakh is a saving for repaying capital. So what did the company do here? Every year, 1 lakh, not 2 lakh, sorry, 1 lakh rupees, because redemption value is 5 lakh, no? So every year, 1 lakh here, 1 lakh here, 1 lakh here. So how much money saved? Sir, at the end of 5th year, I have 1 lakh rupees. So what is the purpose of capital redemption reserve? Sir, capital redemption reserve is that savings box where every year from the profit, little bit amount I put it in this box so that in future, whenever I'm redeeming capital, repaying capital, I can take the help of this reserve. I don't have to depend on my lenders or the existing shareholders. So that purpose, this ledger is being created. Now, this capital redemption reserve, first purpose is repayment of capital. Second purpose, which is allowed by Companies Act, is that you can use this money for issue of fully paid bonus share also. So definitely, this is a specific reserve. So apart from these two purposes, you cannot use this money for any other purpose. For example, if I want to open a new office somewhere in Delhi, for that I need money. Can I go and take from CRR? CRR will say, get out. This is only for repayment of capital and bonus issue. So when the purpose is very restricted, so first the company would want to empty the specific reserve. The company would want to empty the specific reserve. So first reserve that will empty is capital redemption reserve. Any doubt in this, online people?
No, sir.
No, sir.
The second reserve that you will empty is security premium reserve. What is security premium reserve? The company issued shares whose face value was 10 rupees. But what is the money collected? So over and above the face value. So what is the money collected? Issue price is, let's say 12 rupees. So extra 2 rupees what you collected is security premium. This is the premium value of the company. Security premium means what? This share is not a normal share. This is a premium share. If you want to buy this share, 10 rupees is not sufficient. You have to pay extra 2 rupees. That premium this company shares are. So now all of you know, once the premium is collected, the money which is there in premium account, you cannot use it for whatever purpose you want to do. Let's suppose you collected premium 2 rupees into 1 lakh shares. How much money is there in premium account? Say 2 lakh rupees. I want to open one academy in Delhi, one in Chennai, one Bangalore, Hyderabad, Calcutta, Pune. Wish me all the best, no? Thank you. Now, can I use money from the security premium account? The answer is no. If you have studied the Companies Act properly, both in law as well as in the accounts, we discussed the utilization of the security premium. In that, for what all purpose the security premium can be utilized, I gave you the detailed list. In that, the very first line item was the amount in the premium ledger can be used for fully paid bonus share, for issuing fully paid bonus share. So this security premium reserve is also a restricted reserve. I cannot use this money for whatever purpose I want. So intelligence is what? Using the restricted reserve. Because if you don't use this money here, where will you use it? It will be chumma lying idle, no? So what is intelligence saying? This is restricted reserve. Use it for this purpose. One more reason for why people issue bonus, no? SPR money is lying idle. What to do with this money? Don't know. Give bonus share. What happened? The money gets transferred from premium account to capital account. Now, once the money is coming to capital account, can I use for expansion of my business? The answer is yes. So one advantage of why company is giving bonus share is because the restricted reserve, the reserve which is restricted is becoming free. The funds are locked in that. Now the funds are released. Again, they can do whatever they want to do. So this is advantage for the company. Any problem in understanding this part? Hello? Online people.
Okay.
Now, here there is a catch. Security premium, if you are a listed company, you understand what is a listed company? Listed means what? You've heard this name, NSE, BSE, National Stock Exchange, Bombay Stock Exchange. What happens? See, if FFLA is a public company, I issue my shares to public and I want the share to be listed in the stock exchange for the trading purpose. Trading purpose means what? I want general public to buy and sell the shares. So when buying and selling of share happens, what happens? The demand for the particular share will increase. Correct, no? This pen is 10 rupees. Today it is 10 rupees. Upon buying and selling, it keeps on increasing. Because for a particular product, there's more and more demand. The price will increase. If the share price increases, the benefit goes to whom? Existing shareholder. Because I got the share for 10 rupees. But because of the share trading on the stock exchange, because of huge demand, now this 10 rupee worth of share has become 100 rupees. So in no time, 90 rupees increase in per share. So I invested 10 rupee per share, but 90 rupee profit I made. So that is the advantage of share market. Share market means what? People want to trade in the shares so that they can enjoy the benefit of increase in the market price of the share. So all the share which you're seeing in the people buy, Tata share, Reliance share. From where are you buying? You buy it in the phone. So I have an app, I buy it. So am I buying the shares directly from the company? The answer is no. The shares, the company has to list the shares on the stock exchange. So FFLA Limited, if in future is going for a public issue, I need to get my shares listed on these two stock exchange. So this is a center platform where the buying and selling happens. Like how we have Ulvar Sande, where we go and buy vegetables. We have department store, one common place for buying certain products and selling certain products. Same way, this NSE and BSE is like a departmental store where you can buy and sell shares of multiple companies. So now, if the public company are listing the shares on NSE and BSE, it is called as listed companies. The two common listings are Bombay Stock Exchange and National Stock Exchange. But actually, there are more than that. There's something called as Kolkata Stock Exchange. There's something called as Coimbatore Stock Exchange also, but all closed, non-operative. The two stock exchange which is proactively functioning, superbly functioning is BSE and NSE. So if you are a listed company, In that case, the SPR what you have should have been realized in cash. You will tell, sir, SPR is coming in cash only. No, not necessary. If shares are issued for consideration in cash, then the premium is coming in cash. In the topic of issue of share capital, we saw one more topic. Issue of shares for consideration other than cash, where you have issued the shares to the underwriters. You have issued the shares to promoters. You issued the shares to the vendor for supplying of the assets. You issued the shares to the owner of the company for selling the business. That time, what is the entry? Let's suppose I'm buying a machinery worth 10 lakh rupees. I'm buying a machine worth 10 lakh rupees. What is the journal entry for recording the machine? I have not made the payment. Huh? So machine account debit 10 lakh to vendor 10 lakh. Normally, if the payment is made in cash, the entry is vendor to cash and bank. But here we said vendor that vendor, I'm not paying you money. I'm giving shares of my company, that too at premium. I'm giving it premium. So what is my next entry? Vendor account debit to equity share capital to security premium. Now, in the topic of share capital, I discussed with all of you how do you divide the face value and security premium separately. So here I'm not going in that depth of discussion. So when you apply that concept, this 10 lakh rupees will be bifurcated into two parts. One face value part, which will go to capital account. One is security premium part, which goes to your security premium reserve. So let's say 8 lakh is the capital part, which is face value. Example I'm telling you. And 2 lakh is the SPR. So can I say the shares are issued at premium and the consideration is not in cash? We got the consideration as machine. So I gave the shares of my company, but in return, did I get cash? No, I get machine. So this is called as issue of shares for a consideration other than cash. So I got other than cash, which is asset here. So now let's say this journal entry is recorded by XYZ Limited, which is a listed company. Now this SPR, did you realize the SPR in cash or this is non-cash? Have you got any money? 2 lakh rupees when you credited, do you get money? Where is money here? Where is money here? Where is money here? No money. When the issue of share is done for consideration in cash, entry is what? Bank equity share application. Equity share application to equity share capital to premium. That premium money is received in cash. But did you receive this money in cash anywhere? Online people, in the first entry, did you receive money anywhere? Hello?
No, sir.
No, sir.
In the second entry, did you receive money anywhere? Anywhere bank you've debited? Or in future, after this entry, will you get any money on SPR? No. So this is called as SPR not received in cash. In that case, can I use this 2 lakh rupees for the purpose of bonus issue? The answer is no. Sridhar lost. No? Okay. Can I use this 2 lakh rupees for issue of bonus share? The answer is no. If you are a listed company, then security premium you will utilize only if it is realized in cash. If any cash is not realized for listed company, that security premium of 2 lakh rupees you cannot issue for bonus purpose. Sir, what if I'm an unlisted company? Unlisted company means what? A public company, but it is not taken money from public. So do such company exist? Yes. So initially, sometime when the company forms, no, they start with the intention that in future I might need money from general public. So let's start a public company now itself. But luckily that business is doing so well that it never required public's money. So it registered as a public company, but never took money from public. So therefore there was no need for registering them on the stock exchange for trading purpose. So that is called as unlisted company. So if you're an unlisted company, an SPR balance if you have, it may be in cash, it may not be in cash. Then no problem. So if you're an unlisted company, if SPR is not realized in cash, and if you want to give bonus share, it is possible. But if you're a listed company, then the SPR that you should utilize should be only purely money received in form of cash. So let's suppose this is XYZ Limited. SPR in that cash portion, non-cash portion. Let's say total is 4 lakh rupees. 3 lakh is cash, SPR received. 1 lakh is non-cash. Total is 4 lakh rupees. Now this is a listed company, let's suppose. Please tell me, when I'm issuing the bonus share, which amount you can utilize? Full 4 lakh or 3 lakh or 1 lakh? Online people. I want to issue bonus share. So I need money from the reserve. SPR only is a reserve. So I can use this. So can I use full 4 lakh or shall I use only 3 lakh or shall I use only 1 lakh?
3 lakh.
Only? Sir, 3 lakh. Because for a listed company, only that much SPR you can use which has been received in cash. Okay? Now let's suppose this is an unlisted company. Then tell me, 4 lakh, 3 lakh or 1 lakh? Sir, full 4 lakh, because for unlisted company, there's no such restriction. Whether you receive money or not receive money, no problem. Full 4 lakh can be used. Is this point clear or not clear? Online people. Okay, not okay.
Yes, sir.
Yes, sir.
So this is the rank. First, you'll empty CRR. Second, you'll empty SPR. Then still if money is not sufficient, you'll go for free reserve. What is free reserve? So that reserve which is available for distribution as dividend. So please tell me, there is CRR, SPR and free reserve. Company is going for winding up. Okay, forget winding up. Company wants to pay dividend. This money fully they pay dividend. Can they use CRR and SPR for paying dividend? The answer is no. Because CRR and SPR is with a restricted purpose. You cannot pay dividend out of that. So free reserve means what? General reserve. P&L credit balance, surplus credit balance. All these are called as free reserves. The purpose of these reserves is that you can use this money for distributing as dividend. So the last segment that you will utilize is free reserves. So far clear?
Yes, sir.
Sir,
Yes, sir.
in reserves, there are multiple other reserves also there. Example, revaluation reserve. Can I use revaluation reserve? The answer is no. Tell me why? No. You know what is revaluation? We learned in the partnership. After this, I'll go for one practical question. Don't worry. I'll not take too much of theory and try to bore all of you. I'll do one practical question also. Of course, I'll give a break in between after this. Now, let's say land 10 lakh, other asset 5 lakh, capital 2 lakh, other liability is 13 lakh. Correct? This is a balance sheet. You want to do a revaluation. In revaluation, what happens? The book value of the land is upgraded to the market value. Let's say the market value of the land is today 18 lakh. From 10 lakh, if I have to do 18 lakh, how much price have to increase? 8 lakhs. What is the entry for revaluation? Land account debit to revaluation. The moment I put entry land account debit to revaluation, land to reval 8 lakh, 8 lakh, 8 lakh gets added to the land. So it becomes now how much? 18 lakh. And revaluation reserve is getting created here, 8 lakh. Imagine this, you're not distributing to partner's capital account. Correct? In the partnership concept, we have the habit of distributing the revaluation profit to partner's capital account. But in Companies Act, this is not compulsory. You will see that sometimes the revaluation reserve is kept as it is. Now touch your heart and tell me, I want to issue bonus share. Why does the company want bonus share? Because the money which is lying idle in reserve, we want to transfer it to capital for expansion purpose. So I need more money. So bonus issue is one way of funding my business. When the money is locked in the restricted reserve, to free from it, I issue bonus shares. But touch your heart and tell me, the value of land building from 10 lakh, it became 18 lakh. 8 lakh you have added. Have you got this in form of money? Have you realized this cash in form of profit? So this 8 lakh is the unrealized profit. This 8 lakh is profit, no doubt. So 10 lakh rupees I invested in the land 5 years ago. Today it is 18 lakh rupees. So 8 lakh rupees profit. Is it realized profit or is it unrealized profit? Unrealized profit. So therefore this 8 lakh rupees is not in cash. By issuing bonus share out of revaluation reserve, does it even make any sense? If you have money here, then transferring to capital account and using this money for expansion purpose makes sense. Revaluation reserve is like a balloon. You know what is a balloon? I take a pin, put first. Nothing is there. So the revaluation reserve is like a bubble. It is created for some benefit, some purpose. But this 8 lakh rupees profit is not my real profit. It is an unrealized profit. When this profit comes in my hand, when I sell the land, that time when you get the profit, then you tell. I agree. It's a reserve in cash. But this 8 lakh rupees, where did I get in cash, boss? I passed one dummy entry land to revaluation to satisfy certain international standards. IFRS, Ind AS. To satisfy that, we have passed this entry. Where is the money? So is there any logic in transferring the reserve, transferring this 8 lakh rupees from reval account to capital account? No. So therefore, the Companies Act said that bonus shares cannot be issued out of revaluation reserve because these are unrealized profit. Unrealized profit ka another name is notional. Notional means what? Imaginary gain. 8 lakh rupees profit, you said. I can say 20 lakh profit. Who is that to justify that you're right and I'm right? So you telling, sir, land value is 18 lakh. I telling land value is 30 lakh is our imaginary figure. It's called as a notional gain. So that should not be considered for issuing of bonus share. Like that, if there is any other reserve that is created, where the reserve is created because of some illusion, because some assumption, that reserve should not be taken to consideration. An example of this, I'll tell you when I do one practical question. So if there is any reserve which is no real money, it's an illusion, it is a bubble, if it is a balloon, then that you should not consider for the purpose of issue of bonus share. Okay, not okay? Online people, okay, not okay?
Okay,
Yes,
sir.
sir.
Now I'm keeping a halt for some theory. Can we do one practical question and then go for a break? Because
Yes, sir.
now that you've learned the topic, now what makes more sense is to one question we'll see. Let's see, simple question, and then we'll go for a break. Online people, are you all ready for this?
Yes, sir.
Yes, sir.
So, what is the journal entry when I issue the bonus share? Sir, we're giving the shares to the shareholder. When will somebody become shareholder? Only when I give credit to the equity share capital. So, two equity share capital should be credited. Correct? So, whatever money is coming in capital account, this money is coming from where? Reserves and surplus. So, reserves and surplus account debit to capital. This entry, do you have any problem to remember? But we
No,
cannot
sir.
we cannot finish off this entry like that. We have to present in very fast manner because we're studying Companies Act, no? Accounting. So it cannot be easy. It has to be more polished. So what do? This entry we break into two parts. We insert an intermediary ledger called as bonus to shareholder ledger. So how do we break this entry into two parts? Tell me. Debit should be this, credit should be this. What should be the intermediary ledger? And where and how it should be placed? Sir, I want reserves and surplus and all types of reserves in debit. So my first entry will be reserves and surplus account debit to bonus to shareholder. What is the second entry? Sir, I want capital in credit, but debit will be bonus to shareholder account debit. So bonus to shareholder account is created here by giving a credit. So it is a temporary liability and we are closing it by giving a debit. So if credit is plus means debit is minus. So plus and minus same amount becomes 0. Correct, no? So what is my first entry? Reserves and surplus account debit to bonus to shareholder. And we reverse that and give it to equity share capital. Now reserves and surplus, can I write like this directly? The answer is no. You have to write in what order? First is capital redemption reserve. Second is security premium reserve for listed company to be realized in cash. For unlisted company, anything is fine. Third is free reserve. But free reserve, there is an order. So what is the first thing? General reserve. Second is P&L balance or surplus. Okay. So what is my first entry? So my first entry is upon the bonus being sanctioned, authorized. My first entry, the moment you were being authorized, okay, let's issue the bonus share. The first entry is capital redemption reserve account debit, security premium account debit, general reserve, and P&L account debit to bonus to shareholder. So these two are called as free reserves. And P&L account is sometimes called as surplus also. They interchange the ledger entry. Don't get confused. So first is capital redemption reserve, second is SPR, and third is free reserve. In the free reserve, the first order is GRN, second is P&L or surplus. You can interchange and write it, but they are following an order. We'll also stick out to that for order. It's okay? All people? Are you okay with this?
Yes, sir.
Now, Second entry is what? You reverse the temporary liability and give a credit to the capital account. So what happens? Ultimately, bonus goes out. So what is my net entry? Reserves and surplus account debit to capital. So what happened? Capital increases, reserve decreases. Plus in capital, minus in reserves and surplus. So all the impact is happening only on the liability side. Online people okay with this point?
Yes, sir.
Okay. Now, illustration 1. Following item appear in the trial balance of Bharat Limited. Limited means what? Private company or public company? If it is limited, public company. If it is private limited only means private limited company. And now, whether this is listed or unlisted, very clearly said in the bracket, it is a listed company, which means this particular company's shares are either listed on Bombay Stock Exchange or National Stock Exchange or both. As on 31st March 22. So this is the trial balance as on 31st March 22. Okay. Now, what is the trial balance says? Sir, 40,000 quantities of equity shares of 10 each is being issued. So what is the current equity share capital of the company? 4 lakh rupees. My question goes to all of you. Is this 10 rupees fully called up or not called up? Second question, is it fully paid up or not paid up? Sir, if it is not fully called up and fully paid up, what will they mention? So 40,000 equity shares of 10 each, comma, 8 called up or 8 paid up. They'll mention, if you remember the format very clearly. But here like that, have they given any extra information? No, which means that full 10 rupees been called up. Sir, full 10 rupees been called up. So 40,000 into 10 rupees, 4 lakh rupees is the called up capital and paid up capital. Now, can this company issue bonus shares? Sir, yes, because these are fully paid up shares. Only a fully paid bonus shares can be issued. Sorry, fully paid equity shares can be issued. Bonus shares. Next, CRR, capital redemption reserve. Which rank? 1, 2, or 3? Order. CRR, which order? First, rank 1. Very good. 55,000 rupees is there. Second is SPR collected in cash. Which order? Second order. Very good. 30,000 rupees is there. General reserve. What category of reserve? Free reserve. 1,05,000 rupees. In free reserve, general reserve is what order? First. Second order is surplus. The credit in balance of P&L account. 50,000 rupees is there. Trial balance is clear, online people? Hello?
Yes, sir.
Yes, sir.
Okay, Dhanusha Isha said yes. What about Alvin, Gokul, Gurleen, Jivika, Madhu,
Yes, sir.
Trisha?
Yes, sir.
Okay, now the company decided to issue the company decided to issue two equity shareholders bonus share at the rate of 1 share for every 4 share held. So what is the ratio? 1:4 or 4:1? Only people, 1:4 or 4:1? 1 share for every 4 share held. Only people, no response. People are not listening. I know. I'm going. Bye. I'll go.
Okay.
Nobody is
Yes,
responding for
sir.
that also. I should be there or I should go? I'll go.
No, sir.
Okay. So ratio is 1:4. So always 1 represents what bonus you're getting, and 4 represents what you're holding. So 1 share is issued for every 4 share hold. So 1:4 is the ratio. And for this purpose, it is decided there should be a minimum reduction in free reserves. Obviously, first reduction here, second year. If there is any money required, then you'll go to general reserve. So by that virtue, you're ensuring that the free reserves are minimum touched. Pass necessary journal entries. So my question goes to all of you. What is the ratio of bonus issue? 1:4. Very good. Is the shares of the company are fully paid up or partly paid up? Fully paid up.
Fully paid
Now,
up.
can I go ahead and do the issue of bonus share? Yes.
Yes,
So
sir.
please tell me, what is the number of bonus share to be issued? Working note number 1. Calculation of bonus shares. How do you calculate? Number of bonus shares is equal to number of shares held divided by how many shares are held? Total 40,000. Total 40. For every 4 share, there is 1 share given. So divide by 4 into 1. Into 1 by 4. 1 is to 4. Correct, no? So in fraction, how do you write 1 by 4? So I got 1 by 4. Any problem here? Online people?
No, sir.
So what is the number of shares hold? 40,000 into 1 by 4. Into 1 by 4. So what is the number of bonus share issued? 10,000. Bonus capital how much? So 10,000 multiply with the face value of that particular share. So what is the face value of that category of share? So 10 rupees. Same 10 rupees only. Because you're issuing the shares to same category, no? So for that category, what is my issue price? What is my face value? 10 rupees. So 10 rupees. So what is my bonus capital? 1 lakh rupees. So in the equity share capital account, when you credit 1 lakh rupees, you need to take same debit 1 lakh rupees from multiple reserves. So this 1 lakh, first you will take it from CRR. If still money is required, you will take it from SPR. If still money is required, you will take it from GR. If still money is required, you will take it from P&L or surplus. So what is my first entry? Sir, how much money is there in CRR? Sir, CRR, I have 55,000 rupees. Okay. How much money more required? 1 lakh minus 55 is how much? So 45,000 more I require. How much is there in SPR? 30 is there. 45 minus 30 is how much? 15,000 more I need. From where will I take? General reserve. Total is 1 lakh. Sir, this 1 lakh what I want, I'm taking fully from CRR. Still money is not sufficient. So I'm taking 30 from SPR. Still money required. So therefore I'm taking 15,000 only from GR. So what is my journal entry? Sir, CRR, Capital Redemption Reserve account debit 55,000. Security premium account debit 30,000. General reserve account debit 15,000. 2 bonus to shareholder 1 lakh. I want all of you to write it with the heading. Journal entries in the books of Bharat Limited. Heading, format. Please do it. Particulars, LF column, debit rupees, credit rupees. Please do it with the format. No cheating. Done? What is the nature of bonus to shareholder account? It's a temporary liability. How many people done with the first entry?
Yes, sir.
Yes, yes.
Now, imagine, no, you pass the first entry and leave it. What will happen? In the balance sheet, your reserves and surplus will get reduced. Unnecessarily, bonus to shareholder ledger will come and appear on the liability side. When somebody sees this bonus to shareholder, he will not be wondering what this is. Nonsense. If bonus to shareholder is appearing on the liability side, it is as if we have to make some payment to somebody. Are we going to make this payment to somebody? No. So therefore, we should eliminate this temporary liability by giving a debit. So the very next entry is what? Bonus to shareholder account debit to equity share capital 1 lakh, 1 lakh. So what will be the narration? In the first narration, this you'll write bonus issue of 1 share for every 4 share held. When you pass the second entry, this is called as capitalization of profit. So narration I have to write properly. This will carry mark. Online people, have you written the first 2 entries?
Yes, sir.
Others?
Yes, sir.
Yes, sir.
2 people left the meeting. Who's that? One is Serena. She said network issue is there. One more person who left the meeting is Gokul, you there?
Yes, sir.
Okay. Now I have a question for all of you. Sir, when the bonus to shareholder account is to be closed, why did we open it here? In the capital topic, I told you application account is open to check for the minimum subscription. Correct, no? Here, why are we opening this temporary liability ledger? Why cannot we directly do reserve to capital? Why? Convenience. Why? Because let's suppose this is reserve ledger, CRR. So what is the balance brought on a CRR? 55,000, correct? Now what is my entry posting? CRR account debit 55,000 to bonus to shareholder. So 2 bonus to shareholder will be how much? 55,000 rupees. Correct, no? So when you go to the CRR ledger and see 2 bonus to shareholder, we understand that, okay, this CRR has been utilized for the purpose of bonus. So you'll get a better understanding. So when you go for auditing, you'll scrutinize the ledger. That is a part of your audit procedure. So if you just write 2 equity share capital, why this has gone to capital account, you would be wondering, no? Is it bonus issue or is it some other issue? So this journal entry will give me a clarity that the utilization of reserve is done towards the bonus. That is why a ledger name is opened similar to the bonus name. For bonus issue, they've opened a bonus ledger. So that whenever you scrutinize a ledger, you get a better understanding. Acha, for this purpose only, this amount has been utilized for. And in the equity share capital account, already there is a balance brought down, some amount. Now what happens? It will become by bonus to shareholder. By bonus to shareholder. So which means the share capital is increasing. The balance capital is increasing. Why it is increasing? Because in the current year, we have given the bonus issue. If you chumma write by GR or by SPR, what will you understand out of that? Why GR is coming in the ledger? Why SPR is coming in the ledger? You'll be in confusion. But now when the word bonus is there, you'll understand, acha, this was because of bonus issue. So capital from, let's say, 5 lakh rupees has become 6 lakh. Why? Because of 1 lakh issue of bonus shares. So it is easy and convenient for us to read the ledger sometimes when we have these kind of intermediary ledgers. Otherwise, imagine if this bonus to shareholder is not there, what will you record? Instead of recording by bonus, you will record by general reserve, by SPR, by P&L. You will not even understand why the hell this GR SPR is coming here. You'll be wondering always why this is coming here. So to avoid that confusion only, we are opening this intermediary ledger. Is this logic clear to all of you? Tell me, people, any difficulties here?
No, sir.
No, sir.
In my class, I have one problem. Every small thing about I like to explain and discuss. Whatever data is there here, what will I do by keeping that here with me? I discuss everything open. Correct, no? We should know all these petty things, no? Because when you go for articleship, maybe in inter, it might not affect you so much. But when you go for articleship, somebody asks you a logical question like this. What will you say? My Pratik didn't even teach me properly. So I took fees but didn't teach properly. That blame should not come. Everything I'll tell you. The problem with you is what you should remember. So for remembering, what are you supposed to do? Revision. So what is my revision technique? What is the ideal revision technique? If today you're doing class, when should be your first revision? Within 12 to 24 hours. Tonight or preferably tomorrow morning. So before going to night, revise this. Whatever you discuss, properly, aram se take your time and revise. Take your time and revise. No problem. Or tomorrow morning. Whichever you feel comfortable. If the topic is very critical, sir, I cannot wait for tomorrow morning. Do one revision tonight, one more revision tomorrow morning. If the topic is very critical to remember. Otherwise, if topic is normal, either today night you do revision or tomorrow morning. So this is your first revision. When should you do your second revision? Sunday, weekend. Sunday. So Sunday, what you should do? Whatever you have studied the entire week, you have to do a cumulative revision on Sunday. If the topic is too difficult, I cannot wait. So Monday, Tuesday, Wednesday, whatever you've studied, you'll revise on Thursday. Thursday, Friday, Saturday, what you've studied, again revise on Sunday. So revision, there is no particular way that you have to revise like this only. What is important is that you have to understand which topic is easy, medium, and tough. Easy topics require less revision. Medium topic, little bit more. Tough topic, more revision. The more you revise, the data very neatly organizes in your mind, which you will never forget. When are you supposed to do your third revision? When are you supposed to do? Sir, third revision also you have to do? 100%. When are you supposed to do your third revision? Sunday you did the second revision, no? Leave 2 Sunday gap. Third Sunday. From this Sunday, leave 2 Sunday. Next to 2 Sunday, leave it. Third Sunday, you're supposed to do one more revision. Which means in a month, you are doing 1 class and 3 revision. If you do this, just imagine what the data which is there in your mind, how strongly it will be stored. So when are you supposed to do 4th revision? So 4th revision also you have to do. Total minimum 5 revisions before exam. Minimum 5 revisions. So 4th revision when? So after 1 month or 45 days. So once you've completed this part, no? Calculate 1 month or 45 days. You have to do 1 more revision. 5th revision just before exam. 6th revision on the date of exam. This is for you to score 300 plus. If you want to secure a rank in the intermediate and final level, you have to follow this. Now, this revision strategy, what I'm giving to you on the screen, may depend or differ from person to person because everybody's grasping ability, application of mind, cross application of mind differs. So if you feel that, sir, even despite doing this, I'm not able to recollect certain things, come back to me, I'll give you a customized revision strategy. So revision strategy differs from person to person and subject to subject. The strategy what I give for accounts, I cannot give for law. Law, I have to give more robust technique. So if you feel that, sir, this revision technique, I can apply for law. If it is giving you good results, no problem. If it is not giving you good results, come back to me. I'll give you a better strategy. I'll understand what is wrong with you, what difficulty you're facing. Accordingly, I'll give you a revision strategy. So test when am I supposed to take? The moment you complete your third revision on Sunday, sorry, second revision on Sunday, not third revision, second revision. After that, you can take up the test. So the time between taking the class and taking the test at least should be 1 week to 10 days gap. If you're completing the chapter today, you should take test after 7 days or 10 days or 15 days. If you give that much gap, your retention capacity is checked. Your retention capacity is being tested upon. If you do the chapter today, fully over, immediately tomorrow, if you take test, you will perform better and not be able to check your retention capacity. But give a gap in between because in that 10 days gap, how many things will happen in life? So this will easily fade away. Then you do a revision. If you're doing a revision, if the data is immediately recollected, then means you have done revision properly. Then after that, if you're performing still well, then you have studied properly. So all this is psychological pattern. Nobody gives importance to this. This is very, very, very crucial important. Clear this point? So classes, understanding the class is very important conceptually. Don't think that this is not important, this is not important. Everything that I'm sharing with all of you, each and every word that I'm discussing with you is important. If it is unimportant, I myself will filter it and give it to you. Don't worry. So each and every data that I'm presenting to you is important. So understand the class properly. Do not get carried away in the class in your own imaginary world. Be physically present in the class, whether offline or online, be in the class. First thing that you have to take care of. Second is please follow the revision technique that I'm suggesting you. 1, 2, 3, 4 revision. Please do it. The test, in which order I want to take it, please take it. Please do not deviate. You have to take up the test. Test will tell you what level you are standing, what the difficulty level you will face. 3 things you've taken care of. 4th thing is, please, if you're finding any difficulty in planning your studies, if there's any difficulty that you're facing in personal life, which is an hindrance to your preparation or studies, please come back to me and discuss. Sir, this is a problem. What should I do? How should I deal? You guys must be 17, 18 years old, 17, 18, 32 years old. 32 years old, telling only. Otherwise, I'm very young. If you see here, no, only one gray hair I have. This is not dye. This is natural color. Imagine how much of struggles I've seen in life. From that journey till here, You've reached only because I've been a solution-oriented person. Because even earlier, like you all, I was problem-oriented. Which means what if something happens in a life, if some problem comes, we only focus on problem. We don't know how to come out of that and what is the solution to look up to. But in my life, so many things happened. My behavioral changed. I met good and positive people in life who trained me and valued me in different ways. So I always tell my student that if you have a problem, I have a solution. So if you are finding it difficult to solve it by yourself, please come to me. I'll assess your problem. I'll give you a solution. Why? Because with problem, one person cannot study properly. When you study, your mind should be free in peace of mind stage. A lot of kasamusa is there in your mind, then you cannot focus on studies properly. So it's very important that you should be relaxed and composed. That's why I always tell my students, if you have any problem, just reach out to me. That is the counseling support that we want to give, which you will not get anywhere. So these 4 things you take care, guys. I'm telling you, this result is in our control. And whatever planning you're making, make a realistic planning. Be true to yourself. June exam is going to come in next few months. How many days? We are in March 7th now. 31 minus 7 is how much? 23 days of March. April 30, May 30. How much? 60 plus 23 is how much? 93. And 20 days in June we have holiday. So how much? Approximately 110 days we have. Approximately we have 110 days. So in that 110 days, you have to finish off the new chapters classes, plus all the old chapters revision test has to be completed so that you get good scores in the test here, at the same time pass in the main exam. Anywhere in this period you feel that no sir, I'm not on track, everything is collapsing and falling apart, your job is to immediately give a call. Let's discuss over call if you're far away, and or if you're in Coimbatore, immediately come to me. We'll discuss and sort out the plan for you. Don't hesitate that sir is busy. He's doing multiple calls, multiple meetings, classes, and all. How will he take time for us? That's not your problem. That's my problem. Your job is only to reach out to me. Sir, this is a problem. Please help me. Finish. It is my duty to take some time out for you and help you out. How I'm taking time out, that is not your concern. Correct? No? Because you are here to study, to get through the examination. Correct? And my expectation, always I tell you, is 100% result. When we don't get 100% result, we feel very dejected. Because as a student, you're coming to me for what? Studying and passing the exam. As a teacher, why am I putting so much effort for you? To make you study and pass. When both of us are having same intention, if my hard work is there, your hard work is there, then why should we not pass? What is wrong if I have an expectation to give 100% result? If let's say 20 people are studying with me, 20 of you are studying with me, I want 20 of the 20 to pass. What is wrong? Correct? No? You do not pay fees that no, so this time I'll fail, next attempt I'll come and again pay fees and study from you. Is it? Correct? No? So this time I'm very clear. Last June, 6 people wrote exam. All the 6 cleared. So that gave me confidence that if you are determined and if I am determined, we can achieve anything. But in our determination, if one person also up and down mismatch happens, gone. So I want a promise from all of you that may come what? You will put not 100% effort, 1000% effort from your end to ensure that we get that PASS in the June examination. Even if one person doesn't get through, no, for me that day is gone. This time when the result came, definitely few students of mine did not get through. I did not have that day's dinner, next day's morning breakfast. Who does that? The only reason is that I'm so emotionally connected with all my students. Your failure is also my failure. How can I be happy in that? Correct? So you were also sad, few of you. I was also sad. Do you want to relive that moment? On the other hand, just imagine if pass is coming in June. Party only, no? This time we are supposed to do what? Award ceremony. I've postponed it. I was like, no, I want to do it with my students. But I think for foundation result will come only in August. So I'm planning somewhere in July is what my plan is. So, but definitely I want in that ceremony all of you to be there with that award holding, very proudly I want to present that award to all of you. So can we work relentlessly hard and get that goal. I'm telling you, it's a miraculous feeling. I'm telling you, not passing any level of CA examination or getting the 2-letter word to your name. No, that happiness, what you get, you cannot match that happiness with anything in the world. The pride what you carry for your own self, the pride that you're going to give to your parents. No, I'm telling you, even for a marriage, they'll not be that much happy. Trust me, I'm telling you. Marriage, if you are a boy, parent is like, oh, I have to take one more girl. வீட்டுல செலவு ஜாஸ்தி, என் பையன் இருக்க மாட்டான், my son will be no longer my son, wife will partition. Generally I'm telling, not your exceptional case, pa. If girl goes out, no, when helping hand is going out, correct? No, amma ku idli vada ipo yaar seiva, who will clean the house, bathroom yaar kaluva, correct? No, so when marriage happens, no, though the parents will pretend they're happy, but they're not that much happy. But the day you become CA, no, 100% tears will be rolling out of the eyes. 100% telling you. It's worth an emotion to lift. I've gone through the emotion. Anytime has gone through the emotion. Every CA today has gone through the emotion. You will not find one person on this planet who's become a CA without tears in his eyes. That day resulting. I think that emotion is worth living it. At least once in a lifetime. Worth it. For foundation inter itself, so much drama means for final, imagine what drama it will be. Next level. So every day morning you get up, now just close your eyes, think of that day. When the result, CA final result comes, pass. The 2-letter word is it's got added to your name. Imagine the joy, the pride that you will get. And your family members, they'll no longer call you by your name. They'll come, CA sir, please come. Sir, auditor sir, please come. That is the kind of kick you will get. Worth living that moment. So for that, hard work starts right from now. So not 100% effort, 1000% effort is what I'm looking forward for. Online people, can I get that support from all of you? Hello?
Yes, sir.
Yes, sir.
Chalo, fantastic. So on that positive note, I'll put an end for today's session. We are not done with bonus shares yet. We're meeting again tomorrow. So tomorrow, probably I'll just inform you time in the WhatsApp group by tonight. So tomorrow we'll be done with bonus shares. So the complicated part, little bit is still yet to be discussed. So that if you're done, the topic is over. So we'll do a quick recap of what we did today, and then we'll go with the new topic. So your revision also a little bit simultaneously will happen. Okay? So on that positive note, let's put an end to today's session, people. I'll see you all tomorrow, maybe around 5:36 p.m. in the evening. Until then, bye-bye. See you. Take care. Thank you.
Thank you, sir.
Thank you, sir.
Thank you.